Hello again everybody and welcome to my channel. My name is Dr. Tosin, and if you're new to my channel, I generally do videos around health, lifestyle and productivity, but today is going to be different. Today we're going to be talking about investing. So this video was brought about by a couple of discussions I've had with colleagues, fellow medical doctors, and we were talking about, let's say you had £1,000 for instance. I'm using pounds for instance because I live in United Kingdom. You can transfer it to any currency of your choice that you want and work through the sums. Essentially, it's the principle behind it, not exactly the amount itself. So we're taking £1,000 for instance as an example, and we talk through things. Now, investing can be quite tricky for beginners, so people get confused when they hear terms like ISA, LISA, Roth IRA in America, or fixed income funds, or all those things. Well, I'll say let's keep it stupid simple. Anybody that had £1,000 right now and you wanted to invest it, and you were looking at investing it in the stock market and did not know what to do, the simple thing I did with the example I had was, like, I had £1,000 and I decided to invest it. Now, one option is to just go on a platform and buy stocks. Then you go run into the trouble of, what stocks do you buy? If you have the time and you want to research and go through that process, that's up to people. But the rule that has always been put out there and kept it simple is, as for a beginner, if you have money, start by investing in things like index funds. So one simple way that we did it was, let's say you've got £1,000 and you've saved that money up, and congratulations, by the way. If you've saved £1,000, quite difficult to save money, but you've gotten there, you've been able to accumulate money. Now you want to invest the money in the stock market, but you do not know how to go about it. Now, this is just my information. It's obviously, like they say, it's by no means financial advice, whatever that means, and all that stuff out there. Always seek a financial advisor, all that. Anyway, coming back to it. So with £1,000, what someone like me did was, I took the money and I decided to break it into shares and pots. Well, not shares and pots, what am I saying? We broke it down into percentages or groups of things. So I took 60% of that money, that would be £600, and I decided to invest in an index fund. Instead of just any index fund, I chose what we call an ETF. Now, an ETF is known as an exchange traded fund. And what that is an asset that tracks a particular set of equities that are similar to an index. But the key takeaway there is that you can have ETFs for different sectors in the market, or you can have a general ETF that tracks the whole index itself. So for this particular thing, I chose the ETF that tracks the whole S&P 500 index, and that we got on the Vanguard platform. So I use both the Vanguard platform to buy my ETFs, and I also use an app called Trading 212. No affiliations to these things, but I just feel these are the ones that I found quite useful, again, with the charges. And one of the beautiful things again is that with index funds and ETFs, you get very low charges. I think the ETF that I bought, the charge was 0.10%, essentially, which gives me good return on the money. The performance itself over the past number of years has been fairly good. Tracking the market, it has done at least slightly better, slightly better than the general benchmark of the market itself. Slightly down now because of the stock market term, but it's something we are doing in the long term. So we do what we call a set it and forget it strategy. So even though I've invested £700 in the ETF, over the next number of months, I'm going to put it on a rolling automated platform where every month a set amount of money goes into that ETF, and I aim to build it over a period of time. Now, one option that you get with Vanguard is that when you are opening an account, you can open either a general account, stocks and shares ISA, or a personal pension. Now, key thing here I want to do as a slight segue is the personal pension. It's also known as an SIPP, self-invested personal pension. Now, one option people have is to open a personal pension. So if you had £1,000, for instance, what would be good was you just take the £1,000 and put it into opening that personal pension account. Now, with that, in that personal pension account, you get to choose the types of investments that go into it. So one of the investments could be the particular ETF that we talked about, the Vanguard S&P 500 ETF, and you buy that particular ETF in that pension. The beauty of a SIPP is that you get tax relief, and the taxman pays you 20% on top of that money. So for instance, if I've put £1,000 in the personal pension account, next month after that, the taxman gives me £200. Interesting in that I can now decide that with that £200 now, I can class it as my quote-unquote free money, and I can now use that to buy any other things around in that portfolio that I want. So which is the good example that we use. Now the quick caveat here, which probably we should have led with and started with, is that if you saved £1,000 and you want to start investing, you always have to have made sure that, one, you've got some free money, or what we call the what if money, saved. Gurus out there say you should have at least 6 months savings there. I personally feel that is unrealistic, and I feel people should have made at least 1 month savings in cash somewhere, or maybe 3 months if they've got enough money. Or if you've got big loans or credit cards, you should be in the process of paying it down. So if you do have £1,000 and you've got a big credit card bill with you, I'll probably say dedicate a minimum of 20% of that money to paying off part of that bill first to start with. So you are paying down the interest and the capital on your loans or credit cards, and at the same time investing. So after I've taken my 60%, in this case £600, to invest in a safe fund like the ETF, the Vanguard S&P 500 ETF that I talk about, the remaining £400, 40%, I've used to invest in my specialty type funds that I want to do. In this case, it's the biotech industry I wanted to use the money for, which I did. I now follow a strategy by a chap called Joseph Hug, who runs the Bowtie Nation. It's called the Core Satellite Strategy. I find it quite interesting. So I took 50% of that money. If that's 50% of £400, that comes to £200, and I use it to buy a biotech ETF. This one was the SPDR S&P 500 ETF, I think it's called XLV. Anyway, that was it. That has got good performance and had low cost as well. I'll put all the details in the notes for you to see. And the remaining money I used to buy some specialty biotech stocks that I had tracked and followed and I had read up on. I'll be giving you the ticker symbols for those in my upcoming video, telling you why I invested in those stocks and showing you what the average performance that I hope is going to come up from them will be. So that's my simple step on how I started investing with £1,000. I broke it down into simple parts. 60% of that went into what we call a safe fund, either an index fund or an ETF. I chose to go with the Vanguard S&P 500 ETF. And with the remaining 40% of the money, what I decided to do was invest in biotech stocks and a bit of other stocks. Now with the biotech, I also used part of that money. I took 20% and bought the biotech ETF. But because I'm in the healthcare industry, I think I've got a slight bias to that with the knowledge I have, and at least I'm able to understand the data better. And the remaining 20% I used to buy a generalized diversified portfolio of stock things. But I've generally gone more biotech this year, and I've chosen some biotech stocks that I've bought. I'll be giving you the stocks on an upcoming video, telling you why I've chosen those particular stocks. So thank you very much, guys. If you like this video, do not forget to press the subscribe button down below. I do not generally do investment videos, but because I've gone into biotech now, I will be giving you tips and tricks on biotech stocks that I'm following, and why I'm investing in particular in those particular stocks. It's by no means advice, it's just my information out there why I think those stocks will do well. And yeah, it's a learning journey for me as well. If you've got any thoughts, any comments as to what you think, how you felt that went, or anything you think we could improve on, please leave a comment down below. This is Dr. Tosin. Thank you very much, guys. Catch you on my next video.